This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July 20th, 2012. Our time is 8:43 Mountain, 10:43 Eastern. Radio show runs QR 77 Calgary, 630 Chet Edmonton, AM 640 in Toronto. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. Don't forget, you can sign up for our free podcast. We are portable. You can take us anywhere via iTunes. To invest in precious metals, the only company Harold recommends you use, a Canadian company in business for 10 years. They have anniversary incentives. Speak with Worldwide Precious Metals, WWPMC.com. Telephone number 1-866-623-2002. Later in the show, we'll talk about diamonds. Harold's website is rarecoloreddiamonds.com. To connect with Harold about diamonds, 1-800-432-1022. And we'll talk later as well about Harold's website, hsfineauctions.com. Harold, we are sort of into the heart of summer, and it's thin trading, not a lot of traders around, but the news that's coming out, we can really see a massive setup in the fall for hard assets. You can see it coming. The economy is really starting to roll over. Even the cheerleaders are even having to begrudgingly admit things are getting very, very bad all over the world. I think it leads to quantitative easing, and hard assets really fly in the fall.
I think you're 100% right, Randy. It is getting very, very concerning and very confusing. You know, the headlines are extremely concerning. Recession, depression, collapse, hyperinflation. I mean, all these reports are coming out, and as you said, even Wall Street is getting a little bit concerned, so that is, something to be, concerned about, obviously. Now, all in all, the markets are thinly traded. During this part of the summer, they aren't as heavily traded, but the current events are so strong that we could literally see and wake up one morning and see the price of gold and silver and other markets just absolutely skyrocket. And I do believe that there will be another quantitative easing. In actual fact, I don't see how there's not going to be, because the economy in the U.S. is not improving at all. So this week, the markets stay basically very strong. For gold, we're trading right now at $15.81. We're down $3 on the day, but that's primarily because the dollar is strong. The silver market is down only 9 cents. We're trading right now at $27.32. So what we need to see is for gold to break and close 2 days in a row above 16.25. That would be a very good situation, and we could see that very quickly. With gold trading right at around 15.80 to get it to 16.25. You could see that in a day or two. You need two good closes above 16.25, and then you'll see the market start to advance and start to take out the $1,700 and $1,800 level. And again, judging by everything that's gone on for the last 9 or 10 months, where we've seen the gold market and silver market fall off and stagnate, the fact is that the high in gold was $1,900. We're still basically at $1,600 gold. We're only down $300 from the high. That could be made up in a very, very short period of time. We've seen, gold move up over $100 in a day on other situations. Silver has dropped more than gold did. Silver is the more volatile of the two metals. Silver was high as 50. Dropped down to 26. We're trading right now at about 27.32. I'd like to see two closes above $28 and then a couple closes above 30. And we could still, literally this year, we still have, just under half a year left. The current events and the fundamentals in the market are so strong that we could literally see silver come back to the $40 to $50 level or higher, given the situations that we may see going into the last quarter of this year. The platinum and palladium market are basically just staying at the same levels. Platinum's trading at about $14.20. Palladium's trading at about $580. The oil market was the market that had the biggest week this week, along with corn. But the crude oil market, as we're taping the show, is all the way back up to $91.43 and is down $1.23 for the day. So we've been to $93 this week. Don't forget, it was only about a week and a half, 2 weeks ago that oil was trading in the low 80s. So, again, I'm extremely bullish on oil. There are things happening in the Middle East that are going to support the price of oil and start to move it substantially higher. Again, it would not surprise me to see oil at $150 to $200 before this year is out. Now, at this particular point, one of the reasons that oil has moved higher this week is that there was some situations happening between the U.S. and Iran within the Strait of Hormuz and the Persian Gulf. So there were some shots fired, nothing really crazy, and the market did tend to move up from that. However, there was another situation that happened this week where some Israelis were killed, and they think that it was Iranians that did it. So things seem to be heating up in the Middle East, and again, that's a hotbed. That's an area that we're watching very close. We put three major scenarios that will change the markets abruptly. One is the tremendous debt in the United States. Two is the sovereign debt situation in Europe, and three is the potential for a war in the Middle East. And again, it certainly appears at this point that things are starting to heat up. We could literally see overnight the price of oil go up $100. I've seen it happen before, and it can easily happen again if anything is caught off guard. So again, we're continuing with our recommendations that we made at the beginning of the year. In my opinion, nothing has changed. We still recommend gold. We still recommend silver, we still recommend oil, and we still recommend diamonds. Those are the four areas that we feel are going to be the growth areas, and if you're in those particular investments, we do believe you will come out of this scenario doing extremely well. Another thing that's happening at this point that is very interesting is that we've always made the analogy of the U.S. dollar down and gold up. So basically, you know, the U.S. dollar is a very weak currency, and we did anticipate that the U.S. dollar will plummet. However, because of the sovereign debt situation in Europe, the dollar has gained some strength, especially against the euro. So at this particular point, the U.S. dollar is trading, at my opinion, which would be a dangerous level, 83.50 to 84 cents in the U.S. dollar, means that the U.S. dollar is breaking into a bullish pattern. Now, we've always traded gold based on the fact that the U.S. dollar, when it's weak, gold will be strong, and the opposite, when the U.S. dollar is strong, gold will fall. However, there have been situations in history that the opposite has occurred, that gold and the U.S. dollar have rallied at the same time, and it certainly appears to me at this point that that is a very strong possibility. In actual fact, as strong as the U.S. dollar is today on Friday as we're taping the show, which is up 58 points on the day, gold is only down $3 on the day. In actual fact, there's been days when the dollar and gold have been up in the same day. And in 1979-80, when we had massive inflation and interest rates at 22% and gold went to 850, that was the scenario that I'm talking about. Gold and the U.S. dollar both hit their all-time highs based on inflation and raising interest rates. So at this particular point, it's not that the U.S. dollar is the go-to currency. In actual fact, a lot of currencies are in trouble. The fact is that the euro is so weak at this point that it's gaining strength to the U.S. dollar. And again, I do believe that we are going to see that gold and the dollar will separate from each other. And I do believe that gold is going to make a massive rally before the end of this year, right along with silver and oil. So, in my opinion, absolutely nothing has changed. I would take advantage of the lower prices in silver especially, and I would stock up on silver. I would not heavily leverage anything. I would not speculate at these times. These are the most dangerous situations because, again, we've never been in this situation before. So we don't know exactly what to do. So the smartest thing to do is to minimize your risk, not to speculate, not to over-leverage anything, and not to take unnecessary risks. If you can pay down your debts, that's a smart thing to do. If you can get some physical gold and silver into your portfolio and into your RSP, that's a very smart thing to do. Again, even though if they do come out with quantitative easing 3, the stock market in the U.S. will rally and so will the metals markets. So again, that's inevitable. If they want the stock market to go up, and I know that the government wants that badly, we will eventually see QE3, which is not only going to put stocks to new highs, not that I would be in the stock market, but it will also push gold and silver to new highs. And again, that's what we're really into at this time. So again, nothing is changing in my opinion, except to be more cautious. Own your physical gold, own your physical silver. Diamonds are one of the best investments you can make at this particular point, and I certainly love the oil market, and that's the way I see things at this point, Randy.
The telephone number to invest in precious metals. The company Harold recommends, the only company, Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. The first step, call them. Second step, they will educate you about getting involved in hard assets, starting your own precious metals investment account. You can trade the market if you want, just buy and hold your metal. They're there to help you maximize the profit, minimize the risk. They are the experts in this very specialized market. This is all they do. Stay away from people who dabble in this. Deal with the experts. And you don't want paper promises, ETFs, or certificates. You want real physical metal. This is a liquid asset you can buy and sell with the phone call. It can be stored on your behalf, delivered to your door. You can take physical possession of your metal anytime you want. Worldwide will go through all the different ways there are to be involved in the precious metals markets. Give them a chance to earn your business. Let them educate you. wwpmc.com, telephone number 1-866-623-2002. This week in our newsletter, get our free weekly newsletter from Worldwide or from Herald. We send it out via email every week, free of charge. You can go through it in 5-10 minutes, even on your smartphone if you wanted to. You can spend hours if you want to as well. That's the way it's set up. Rick Rule from Sprott Asset Management had a quote this week. He said, "I think that we need a reckoning. Hopefully we have a slow reckoning, but we need to deal with the fact that we owe more money than we can service, and that we have been consuming more than we have been producing. Until we recognize the nature of our problem, I don't think we'll be able to deal with it." Richard Russell came out, and you can read this in our newsletter, very scary commentary. He said, "This is a time to cut back on needless expenses, get rid of all the debt you can, and prepare for tough times. I don't think the utter calm and complacency that I see today is warranted. The last few generations can't conceive of drastic changes and hard times that are ahead." Nigel Farage, who's a member of the European Parliament, has been involved in the gold business for many years in the past. He says the reality is there are now tens of millions of people in Europe who feel absolutely desperate and without hope. I still feel that they are trapped within the Eurozone. In the end, this could have disastrous social consequences. There was an interesting article, and it was from CNBC. How close are we to a new Great Depression? And this is a book Richard Duncan wrote, The New Depression. He was interviewed on CNBC. He said that it really all started when we broke the link between money and gold. This removed all constraints on credit creation. This explosion of credit created the world we live in. But now it seems that credit cannot expand any further because the private sector is incapable of repaying the debt it already has. And if credit begins to contract, there's a very real danger that we could collapse into a new Great Depression. If this credit bubble pops, the depression could be so severe that I don't think our civilization could survive it. As well, a fiscal cliff could trigger a U.S. recession, according to Olivier Blanchard. He's the chief economist with the IMF. He told CNBC, if the fiscal cliff were to happen, and this is a major concern that will happen around the election in the United States or after, it would produce a major macroeconomic event. The fiscal cliff is when a host of tax cuts expire and automatic spending cuts kick in at the end of the year in the United States. And the U.S. dollar could fall off a fiscal cliff into a euro abyss if they do not deal with this situation, according to David Bloom. He's the head of the Global Foreign Exchange Strategy at HSBC. He said that the fiscal cliff is a major, major concern in the United States. And, Harold, everyone's talking about Europe. Oh, Europe is the problem. The United States is a bigger problem in my mind than Europe. It's just a matter of the timing. And a lot of what's happening is being put off. And a lot of the commentary that we've had in our newsletter says, look out for the end of the year in the United States. Look out for 2013, because it is going to be a very difficult year. But when you have somebody like Richard Russell coming out and saying it's a very, very scary time that drastic changes and hard times are ahead. And here's a man who's been writing a newsletter for 55, 60 years, the Dow Theory letters. You have to take heed of what he is saying. It's very serious.
You better believe it. He's got all the knowledge, and again, he's been through a lot of these things, so you're better to be safe than sorry anyways. When things get very volatile and very risky, that's the time that we're supposed to pull back and become more conservative. So that's the route that we want to take. Because we've never been through a scenario like this where countries are going bankrupt, currencies are being devalued, at the same time you've got war in the Middle East, and you've got such tremendous debt that countries like the U.S. can't get out of them. And again, you've got an election year. So if this is as good as they could make things look in the U.S. during an election year so he can get reelected, you can imagine how bad things really are. So when the largest economy in the world is in this type of shape, and then you take Europe and put it in that scenario too, it's all because of greed and stupidity, and it's finally coming to bite us. And at this particular point, again, what does the small investor do? What do we do? We're not the billionaires of the world, and to be honest with you, who wants $1 billion at this point? Where do you put that money? There's no safe place in that sense to put all that money. So what we've got to do is take care of ourselves, take care of our families, and make certain that we don't put ourselves in a situation where we're going to lose everything. What we want to do is sustain our capital, keep what we have, and that's not the easiest thing to do. The best way to do that is through diversification. Own some hard assets. Go back into history and find out how the markets have done during similar situations to what we're in right now. And again, what we're trying to predict is what's going to happen moving forward with inflation, because there is no doubt where we may be in a slight deflationary period right now, there is no doubt in my mind that 4 or 5 years from now we're going to be dealing with the highest inflation that we have ever dealt with. So that's what we really need to gear up on, and we can stand a chance of making an awful lot of money if we play this correctly. You don't want to blow your money before we get the opportunities to deal with inflation, which is going to be where most of the money is going to be made in both diamonds and in metals. So at this particular point, it's capital preservation, and it's to be cautious. Don't take any speculative trades. Don't go into the futures markets. Don't take any unnecessary risks. Own your metals, own your diamonds, put everything aside for safety and privacy, and when the time is right, we're going to be able to strike and make a ton of money in the inflationary markets, and that's not that far off.
David Rosenberg had a chart this week that we have in our newsletter. It's actually very interesting, the demographics of capital preservation. You can see it in our newsletter. Get our newsletter from Worldwide Precious Metals. They'll be happy to send it out to you free of charge every week via email. 1-866-623-2002. Their website is www.pmc.com. Speak with them. Learn about having a component of hard assets, gold and silver, in your portfolio. Start your own precious metals investment account today. And one of the things I wanted to touch on before we get to silver, some very bullish stories about silver this week. Our thesis on quantitative easing, a lot of people are agreeing with us. Strong possibility of further Fed easing by September, according to Goldman Sachs. The U.S. Federal Reserve could ease monetary policy when policymakers meet in August or September, or for sure after the election. Also, Senator Chuck Schumer, he's a senator in the United States for New York. He was actually one of the senators, along with the House. Ben Bernanke actually was a part of a hearing in the House and the Senate in the United States. He told Ben Bernanke, "Get to work, Mr. Chairman." It appears the Democrats may be taking a more aggressive stand and urging the Fed to do more easing. In fact, after he gave his 5 minutes in questions, Schumer ended his query saying that it was basically his conclusion that the Senate and the House wasn't going to be able to do it. He told Ben Bernanke it was basically up to him. That is a huge positive for precious metals if we do see more quantitative easing. Egon von Greyers, in the silver section of our newsletter, made this comment about the silver market. He says, "I think silver will outperform gold. It looks like the upward correction in the gold-silver ratio is finishing here, which means that silver will start to go up a lot faster than gold in the next few months. I don't think it will be long before silver goes back to $50, and in the next 12 to 18 months, we could be well above $50. In a world where most assets will rot, it's critical to hold assets that won't decay, and that is gold and silver. And you have to have it in physical form. That's why you need to speak with Worldwide. They'll make sure you get the physical precious metal. 1-866-623-2002 or wwpmc.com. Stephen Lieb, money manager, said silver is going to explode higher as well. And everyone should be accumulating physical silver at these discounted prices. Just buy it and put it away. It's been money for thousands of years. It's like having a silver bank account, and you can start your own precious metals investment account, silver bank account with Worldwide. James Turk, he gave a silver market update, and he went on to say that he thinks that the summer doldrums are over. Gold and silver are ready to excite once again, and he thinks we can expect a rally from here that will take our breath away. And Harold, a lot of what we're hearing in the news that we have in our newsletter, the economy is very, very tough in Europe. People are starting to realize that it's rolling over in the United States. And the Fed, Chuck Schumer said it, Mr. Bernanke, you need to get to work because we incompetent politicians can't do it. And that's why I'd be literally shocked at some point if we don't see more quantitative easing. And we have about 2 minutes left here in our first segment.
Well, again, it's obvious that they don't want that information to come out prior to the elections. However, I don't know if they can hold off much longer because, again, the numbers coming out for unemployment and for retail sales and everything are pathetic. So, again, I know they're trying to hold off till after the elections. I just don't know if they can. But it is coming, and there's no doubt. And when it does come, the markets are going to react in a huge way. You don't want to chase after markets. If you do your homework and you are comfortable with the fact that certain situations have to happen over time, then you buy precious metals or diamonds or whatever based on that information. All the information that we have points towards another quantitative easing, and it points to high inflation 4 to 5 years from now. So, again, that's what we're gearing up for. We've got gold from 250 all the way up to 1,900, back down to 1,500, and I think the next move's to 2,000 to 2,200. We got silver from $4 up to 50, back down to 26. I think the next major move is back to 40 to 50, and then possibly 60 to 65, and it can happen very, very quickly. You want to make certain that you have your positions in the market prior to these moves happening, and also oil is a very strong investment at this point also.
Dan Orsini, he's a trader, highly thought of by Jim Sinclair and also John Embry. The big money is moving into hard assets. You're basically seeing, according to Orsini, in gold, a move that is noteworthy. The swaps dealers, a category of relatively large traders and big banks, for the first time on my records, are actually net longs in the gold market, even back in 2008, at the height of the credit crisis, when there was a huge change of ownership in the gold market and traders were just jettisoning positions, anything. The swap dealers never made it onto the net long side of the gold market. They are now. And you're starting to see a very significant change of ownership in the gold market. That is a huge positive for precious metals. The story is very long. Get it from our newsletter. Read the whole Dan Orsini story in our newsletter in the gold section. Speak with Worldwide, 1-866-623-2002 to start your own precious metals investment account. Their website, wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July 20th, 2012. Our time is 9:09 Mountain, 11:09 Eastern. Radio show runs AM 640 in Toronto, 630 CHED in Edmonton, QR 77 in Calgary. Our shows are podcasted. You can go to iTunes, sign up for the podcast, take us anywhere you want to go. As well, we are archived on Harold's websites, HESradio.com and RareColoredDiamonds.com. The company Harold recommends you use when it comes to starting a precious metals investment account, investing in gold and silver, is Worldwide Precious Metals, a Canadian company. In business 10 years, they have 10-year anniversary incentives. Speak to them about it. Go to their website, wwpmc.com, or call them at 1-866-623-2002. Harold's website's rarecoloreddiamonds.com. The telephone number to connect with Harold is 1-800-432-1022. The auction site, and we'll talk about that here shortly, is hsfineauctions.com. We've had approximately 6 auctions. You can go there and take a look at all the different items that were auctioned off since November of last year. We're taking a break right now. We'll be back auctioning in the fall. We will let you know when that happens. On Harold's website, rarecoloreddiamonds.com, we have a featured diamond, and we've had a string of stunning diamonds. This week's diamond continues the trend. We have a 2.71 radiant cut, fancy yellow, internally flawless. You can see the video of this diamond on the website. We have a link to it in our newsletter. It is simply stunning. Interesting quote this week from Oliver Chen, who's a Citigroup analyst, and he's talking about diamonds. Supply of diamonds is growing to a low to mid-single digits, and demand is growing at 7 to 15%, which is a nice structural trend for a long-term pricing of diamonds. And that's one of the things we've heard of for quite some time. No new diamonds coming on the market due to lack of new mines, old mines being depleted. As well, the demand is increasing because of India and China and the wealth that is being created there. I went over the newsletters for the past 6 months, and I found some of the top stories that we actually put in the newsletter during that period of time. I put them back in the newsletter for those that are new to the radio show, those that would like to review them again, because I think it's so critical. Back in August of 2005, Harold wrote his very first article and launched the website, rarecoloreddiamonds.com. He wrote the article, Naturally Fancy Colored Diamonds, Best Kept Secret. He was the first to talk about diamonds as an investment. And it's amazing that here we are in 2012, all the stories coming out about diamonds, and this isn't some guy sitting in his basement in his underwear writing an article. This is Bloomberg and Reuters and CNBC, major organizations writing articles about diamonds, investing in diamonds. You can read them in our newsletter. Diamonds trump gold as investors' best friend from CNBC. For the rich, diamonds are the new stocks from CNBC. As well from Bloomberg, diamonds are a great safe haven according to Alan Lando. He's the CEO of Novell Asset Management. Diamonds are a great way to diversify. And colored diamonds, a story from Reuters, becoming investors' best friend. Yellow, pink, and blue diamonds are catching the eye of investors around the world, according to dealers and industry insiders. That story from Reuters. Harold, I congratulate you. I know we say go look at your website, rarecoloreddiamonds.com, because it's like a museum. People can go and take a look around. It's a museum on the internet of some of the finest diamonds in the world, and I would imagine there's a lot of dealers that look at your website and are very envious and jealous. They're like kids at a locked candy store not being able to get at the candy. You've got the greatest diamonds, they don't, and it's been an amazing call you made since back in 2005.
Well, thank you very much, Randy. It's my favorite of all, to be honest with you. Fact is that most people didn't know anything about the diamond market when we first brought it up, and most people didn't even know that diamonds came in colors. However, diamonds that are colored are so rare that it takes 100,000 carats of white diamonds just to find one colored diamond, and I can guarantee you very few of those would be flawless. So you're right. Many of the dealers, which I do not deal with, we only deal with private investors, have been to our website. I've been in graphs in the Wynn Hotel in Las Vegas, and they've told us as they rolled out the red carpet for my wife and I that they're on our website all the time. Didn't know how we get all the flawless yellow diamonds and nobody else does. So I know that Harry Winston's and some of the top jewelers in Europe have seen our site. But again, my site was built for my clients and listeners to our radio show. The majority of our clients are Canadians like myself and you and all the listeners to our show. We take very, very good care of our clients. And we have several clients now from Europe. With obviously the destruction of the European financial systems and the fears and the currency devaluations and countries going bankrupt, people are petrified what to do with their money, and the safest place to put some of your money, not all of your money, but some of your money, is into rare colored diamonds. They never depreciate in price ever. They double in price every 4 years, some of them even quicker than that, and again, they can be sold in other currencies. The other thing is they're portable private wealth. Nobody knows that you own them, and again, in the type of world that we live in right now, that's a very important thing. So again, with everything that's going on worldwide, with the potential of high inflation, how do diamonds do during times of high inflation? Better than almost any other asset. In fact, in 1979 and 80, gold went to $850, silver went to $50, but colored diamonds went up 500% in 2 years. The thing about diamonds is that people realize that they're a good investment, but the fact is that they're always so difficult to resell. Where do you go to resell them? If you had an emergency and you had to resell your diamond, if you run to a jeweler, they're going to take advantage of it. They're going to give you a portion of what that diamond is worth. So what we did is that we built our own secondary market to resell diamonds. So we own H. Siegel Fine Auctions, the only online real-time live auction website to resell diamonds, gold, silver, emeralds, rubies, sapphires, very high-end collectibles, and we built that for our clients. So we're the only company in the world that has this. We're the only company that cared enough to build this for our clients, because what is the point of a client investing in an asset that they can never resell? That's why we built H. Siegel Fine Auctions, and it's only available for our clients and listeners. If you are buying diamonds through other sources, make certain that they're able to resell those diamonds for you, because we only resell diamonds that are purchased through our firm, because we have to be able to back them 100% and know what is being sold and bought. Now, there are certain diamonds that double in price every 4 years. They go up by 25% a year. And let's face it, in this type of economy, what investment pays anything? I mean, you're lucky to make 3 or 4 or 5% on an investment, let alone 25% that a yellow flawless diamond will give you. So every year since 1980, these yellow flawless diamonds have increased by 25%, double every 4 years in price. Back in 1980, you could have bought a 1-carat yellow flawless diamond for about $500. Today, they're about $20,000, if you could even get one. We've invested extremely heavily. We cut 90% of the world's yellow flawless diamonds. That's why when you look on our website, we have the majority of the yellow flawless diamonds available in the world, and most of those end up with our Canadian clients. They're put away for safety. They're put away for retirement. If you took $20,000 and put it into the stock market, and another $20,000 and put it into a yellow flawless diamond, in 10 years, your yellow flawless diamond is going to be worth around $100,000. What is your $20,000 going to be worth in the stock market? Nobody knows. Fact is that's pure risk and speculation, and buying a diamond and putting it away for your future is not speculative at all. They never ever decline in value. As Randy said at the beginning of the diamond section of the show, there's not been a new mine that's been open in 15 years. So it's a depreciating asset in the sense that there's less and less and less available at a time when more and more and more people want to buy them. You see, you don't have to be a multimillionaire and buy multi-million-dollar diamonds to be successful in the diamond market. What you need to do is to be able to buy the right diamonds. And the right diamonds are not necessarily the most expensive diamonds. Red diamonds are the most expensive. They go for $2.5 million for a carat versus a yellow flawless diamond that goes for $20,000 a carat versus a white diamond that may go for $2,500 a carat. So the fact is that we're not chasing after the $2.5 million diamonds. We want to find the diamonds that are going to do the best for our clients, because most of our clients invest under $100,000. In fact, most people can get involved for $10,000, $15,000, $20,000 in the yellow flawless diamond market. Now, I've been investing in these markets for many, many years, started off as a collector. Then when I realized what a phenomenal investment and went through the 1979-80 period when they went up 500% in 2 years, that's when I brought them to the marketplace 7-8 years ago, when I was convinced that we were going to have massive inflation moving forward. I wanted all of my clients to own this type of asset to be able to put it away for safety and for profit down the road. However, over the years, I've given these yellow flawless diamonds to my children when they were growing up, and they did very, very well with them. My oldest son, bought his first house based on a diamond that my wife and I gave him. Now he's got 3 children, our 3 grandchildren, and all 3 of them have diamonds put away for their future. Imagine 20 years from now, a $20,000 investment or a $15,000 investment that you made for your grandchild or your child all of a sudden is worth $200,000-$300,000. That's a nice start in the world for your kids. The other thing is, as I talked about before, was retirement. We all want to be able to retire one day. With these type of market conditions, it's becoming more and more difficult for any of us to be able to retire. But if you put away the right type of assets, you could certainly get there. And yellow flawless diamonds and rare colored diamonds are definitely the avenue that you want to go. Again, a $20,000 diamond put away today could be worth as much as $100,000 in 5 to 10 years from now. I say 5 years possibly because don't forget, in 1979-80, these diamonds went up 500% during times of high inflation when interest rates went up to 22%. We do anticipate we will have a similar market condition in about 4 or 5 years from now. The fact is the Federal Reserve has kept interest rates down at almost zero. They're going to have to reinflate the economy, and when they do that, the fact is that they're going to have to raise interest rates and raise it very, very, very substantially. And I do believe that is going to happen. And it's going to happen within the next 4 to 5 years. So I would certainly say that while you can still get these diamonds, and while they still are available at these prices, you want to get into the yellow flawless diamond market. Now, diamonds of 1 carat and higher are what we recommend in these yellow flawless diamonds, and several are available, again, starting in the $10,000, $15,000, $20,000 range. We also carry fancy intense yellow diamonds that are in the $25,000 to $35,000 range, and we also carry fancy vivid yellow, which is the highest color grade of all, and those are over $50,000 a carat. But all of these diamonds increase in value the same amount, about 25%, but they have to be flawless diamonds. The other diamonds that we recommend very, very highly are the Argyle pink diamonds. Argyle pink diamonds are amongst the most sought-after diamonds in the world because the mine in Australia that produces these diamonds, they produce 95% of the world's pinks. They're all going to close before 2018, which is only 6 years from now. So you buy an Argyle pink diamond, $30,000, $40,000, $50,000, $100,000, whatever these particular diamonds cost, whatever your comfort level is. These diamonds can increase 10 times what today's prices are when the mine closes in 2018. Give it 2 years for these diamonds to totally run out, and there goes 95% of the world's pink diamonds, all that come from one particular mine that is going to close down. It's almost like if all the oil came from Saudi Arabia and all of a sudden Saudi Arabia was not selling oil anymore, what would happen to the price of oil? Obviously, it would skyrocket. The same thing is going to happen with pink diamonds and is happening at this time. We will see price increases of 25% or more on these Argyle pink diamonds. So again, you do not have to be a multimillionaire and buy $5 and $10 million diamonds, even though we do carry those. We do carry diamonds starting at $10,000 for some late flawless yellow diamonds, and we do carry diamond all the way up to $50 million and higher. So we can certainly help any of you. We also at this point, started to carry, for a very specific reason, D flawless white diamonds. D meaning D, the color, is a colorless diamond. Flawless makes these diamonds absolutely the rarest of all white diamonds. In fact, they represent 0.002% of the entire diamond market. That's how rare these diamonds are. I've got them starting at a half a carat. You can get involved in the market for $5,000 or $6,000. If you want to just get started in the market and just get your toe wet type of thing, start off with maybe some of these D flawless whites. They're spectacular. You can get involved for under $10,000. Last year, these diamonds went up by 45% in 1 year. And again, I've got almost 100 D flawless white diamonds. I put a fortune into this market. One of those diamonds is a 22-carat round D flawless triple excellent worth about $7 million, one of the rarest white diamonds in the world. I've got some of the most amazing investment diamonds. We're heading into the most difficult and dangerous financial times that we have ever experienced in our lifetime. In fact, for most of us, we have never been through anything like this before. The smartest thing to do is to be conservative, to be diversified. Do not have all of your money sitting in paper assets like stocks and bonds and mutual funds. You're going to lose most of your money. Those are the riskiest investments to make at this point. I understand that you need to own some stocks type of thing for tax purposes, RSPs, and that type of thing, but have them offset by other assets that are much safer. Gold and silver, they're extremely volatile, but for the right reasons, they can make you very wealthy. And we do believe those times are coming. The next 4 to 5 years in precious metals will be amongst the best we've ever seen. The diamond market is something that you need to get into. It doesn't matter what the name of the investment is. It's what's going to give you the biggest return with the least amount of risk. And in my opinion, that's going to be the rare colored diamond market. I've put most of my money into the diamond market because that's my business. So that's my comfort level. I've never had a client lose a penny in the rare colored diamond market. And again, it's not that we're just selling you on a concept of going out, buying a diamond, and then you're on your own to deal with it and to resell it when the time is right. We do everything for you. We ship the diamond to you. We help you with we pay for the shipping, the insurance, and the duty coming into Canada. We send you our newsletters each week. We've now just started our Rare Colored Diamonds newsletter, which is coming out at the beginning of August, so make certain that you sign up for that. That's totally free of charge. We'll send you our World Financial Report newsletter each week. We'll send you our Diamond newsletter each month. We'll contact you and let you know about auction results. We'll let you know when our next auctions are going to be. And when the time comes to sell your diamond, we are the only company that can resell that diamond for you. So again, if you want to make money in the rare colored diamond market, we want you to give us a chance. Again, give us a chance for your business, and I'm certain that you'll be very, very happy and pleased with the results. And again, this is not a short-term investment. You don't want to buy a diamond today and sell it a year from now. You're not going to make any money. However, you hold on to it for 4 years, and the yellow flawless diamond will double in price. And again, with everything happening in the world, with how dangerous it is in Europe and the Middle East and the United States, let's get into something that's safe, that's beautiful, that you can put it on your wife's finger and have pride of ownership, and when the time comes to sell it, we would be very, very pleased to sell that diamond for you, because that's how my company makes its money. When you sell your diamond through us, we make 10% of the profit. So if you bought a diamond for $20,000 and 10 years from now you sell it for $100,000 and make an $80,000 profit, we get $8,000 and you get all the rest. We're the only company that owns our own auction site. We're the only company that invested in something that was going to create a secondary market to resell our clients' diamonds. And again, we've had 7 auctions. They've all been extremely successful. The next auctions will be coming up in October. By the way, the featured diamond is over 2 carats. It's a yellow flawless, one of the rarest diamonds you'll ever see. To get a diamond that's over 2 carats and flawless is nearly impossible today. Only one diamond in 15 million is over 2 carats, and I can assure you that they're not flawless. And that includes white diamonds too. So again, just to recap, yellow flawless diamonds from $10,000 to $20,000 as a starter. They double in price every 4 years, go up by 25% a year, and during times of high inflation have gone up 500% in 2 years. Pink diamonds, the Argyle mine is going to close before 2018, which is only 6 years from now. We anticipate that if you're one of the fortunate few to own an Argyle pink, they will go up 10 times what today's prices are. A $100,000 diamond will be $1 million diamond in the next 10 years. And we have white, flawless, D-flawless diamonds starting at about a half a carat, starting at about $5,000. So if you want to get into the diamond market and you don't have a lot of money, start with the D-flawless whites. You'll do tremendously well with those also. We want your business. Now is the time to get into the diamond market. Go to rarecoloreddiamonds.com and look at our loose diamond section and go to there often, because we're always adding new diamonds. We're going to add about 300 new diamonds before the end of the summer. So again, now is a great time to get involved. Look at the yellow flawlesses, the Argyle pinks, and the D-flawless whites.
Speak with Harold about the articles, the best of articles that we've had over the first 6-7 months of the year. Diamonds trump gold as investors' best friend. For the rich, diamonds are the new stocks. Diamonds are a great safe haven. Diamonds are a great way to diversify. Colored diamonds becoming investors' best friend. Speak with Harold Siegel at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022, 1-800-432-1022. CNBC quote on diamonds. Diamonds are a way of storing wealth and moving money around easily. The best part of diamonds as an investment is enjoying it while you wait for it to appreciate. And a great quote from S.H. Ball: exceptionally fine colored diamonds have no fixed price, and, as with fine paintings, set rules do not hold. When you have a scenario, and we talked about it in the past, there are countries around the world that are auctioning off bonds, and these bonds are paying a negative rate of return, meaning you're paying them. That, as crazy as it sounds, that continued this week in the United States. Their TIPS market, that's their Treasury protected market, it actually had a record low negative yield. And Harold, I don't quite understand the logic why somebody would give the U.S. government their money, basically paying them because you're getting a negative yield, and yet you have gold and silver and diamonds out there. It just goes to show how much more education we have to do over the years to come. People should get out of these bonds from France and Denmark and other countries, even the United States with the TIPS we're just talking about. Why would you pay somebody to warehouse your money when you could have a hard asset like diamonds or gold or silver? It doesn't make any sense to me.
Well, the problem is that these are alternative investments that most people have never had to deal with in the past before. Let's face it, the situation we're in right now is unprecedented. So, again, you've got to look at alternative investments. That's why we offer online seminars to help educate you. You know, we offer an online seminar for diamonds. So if you want to learn about diamonds, it's our pleasure. There's no obligation. You do not have to buy a diamond through us. Just educate yourself. If you go to rarecoloreddiamonds.com, there is a section that you can sign up for a free seminar. It takes about an hour if you want to do it as a family or as a group or whatever, or as an individual. Again, we're here to help you. These are the most dangerous times, most confusing times. We want the listeners to our radio show, our Canadian clients, to get through these difficult times and do extremely well. So if you want to learn more about alternative investments, and I do them all the time. I'm in Aspen, Colorado for the next 4 months. Colorado's a scary place to be, by the way, not only with the forest fires that, was the worst in Colorado history, but that shooting last night in the theater. But anyways, it's, being in Colorado for the summer, I'm doing seminars, private seminars, and I'll tell you, there's been more people interested in the rare colored diamond segment of the seminar than anything else that we've done. So, again, people understand now that we're in different times, and different times demand different measures, and this is a time for hard assets. We're back in the 90s, stocks and currencies were the way to go. Now it's the opposite. Gold and diamonds are the way to go. It's the opposite of 1990.
Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. On the precious metal side of things, Harold recommends worldwide precious metals, wwpmc.com, or call 1-866-623-2002 to learn about starting your own precious metals investment account today. A couple of items before we get to the end of the show. We have 2 minutes left in the silver section of our newsletter. Morris Hubbard out of Vancouver said, the gold to silver ratio chart suggests that silver is a very strong buy at current levels. To give you an idea, we're right around 58 to 1. And as we mentioned earlier in the show, people believe that that will improve in silver's favor very, very soon. So here we are at 58 to 1. If we had $2,000 silver, if we got to 50 to 1, that would give us $40 silver. 40 to 1 at $2,000 gold. Silver would be at $50. 30 to 1, $2,000 gold. Silver would be at $66. If we got to a higher level of $2,500 gold, 50 to 1, $50. 40 to 1, $62.50, and 30 to 1, $83.33. Cesar Bryant from Gabelli & Company said the big picture here right now is there is slack in the global economy. And I would add that there is substantial pressure on the monetary authorities, obviously the Fed, to spur growth. So I expect in the fall more accommodative action from the major central banks. This will, of course, be extremely bullish for silver and the underlying equities. Rick Rule coming out and saying the silver market is dangerously tight. We don't have time to read that story to you, but get it from Worldwide Precious Metals. Give them a call, 1-866-623-2002 or wwpmc.com. Harold, about 15 seconds left. Thank you for another great show.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Ask him about the featured diamond, also the free online seminars. Take a look around, hsfineauctions.com. And also, it's a must right now. Speak with Worldwide Precious Metals about starting a precious metals investment account. wwpmc.com or call 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.